Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'll be talking about delta footprint charts. And again, before we jump in, if you haven't already, please be sure to subscribe to the channel and click the notification bell so you don't miss any new uploads that I do. And if you find today's video helpful, be sure to hit the like button and leave a comment. Sharing your biggest takeaway and potentially some suggestions for future videos, because today's video is, again, based off of a user comment that came from, again, I'm going to butcher your name, I'm sorry, Sheikh Hindria. He says, I saw your various videos, all are great. Just want to know if I could make another video about delta footprint charts and how we can trade via them, except using them to see absorption zones. Okay, so the regular volume footprint chart, or basically the basic footprint chart that most of us are familiar with looking at, is the bid-ask footprint. The volume that's traded on the bid, the volume that's traded on the offer. And a lot of the Orderflows software out there has the ability to pull up a delta footprint. Okay, and just really quick, what the delta footprint is, it's a horizontal delta. Okay, what that means is it's delta at price. So for example, down here in this bar at 44.90 and a quarter, you see 75 traded on the bid, 25 traded on the offer. It will take the delta for this price, just as one tick above at 44.90 spot 50, it's 137 on the bid and 71 on the offer. It's going to take the difference between the bid volume and the offer volume at price, not in the two-way auction, right? Because when we look at a regular footprint, right, a regular bid-ask footprint, we tend to compare prices diagonally in the two-way auction. However, a delta footprint will just give you the delta at that price, not in the two-way auction. Some software has the ability to give it to you in the two-way auction, but the most commonly used delta footprint is horizontal, which is delta at price. And on my Orderflows Trader software, if you scroll down to ladder content, right, you'll see cell text. And the default is set to bid ask. You have your choice of delta, which we'll look at today, volume, and diagonal delta. People ask, which is better, the delta at price or diagonal delta? Me personally, I'm fine with just normal delta at price. And so you're just going to choose delta and click apply, then click OK. Okay, now you're going to see at each price level if the delta was positive or negative. On the Orderflows Trader, it will, if it was negative delta, which means it was there's more aggressive selling into passive buying, it's going to show as negative delta. If there was more aggressive buying, then it's going to show positive delta. It's going to be on the right side. So you see, anytime I see minus 77, minus 34, minus 89, minus 66, minus 50, that negative numbers are going to be on the left-hand side, which is the bid side. The positive numbers are always going to be on the right-hand side, the offer side. And how you can use this is basically it's telling you that more volume traded on the bid if it's negative than on the offer. If it's positive, more volume traded on the offer than on the bid side. That's why there's no volume on the bid side when there's volume on the offer side, just as there's no volume on the offer side when there's volume on the bid side. Okay, so what does all this mean? Now remember, this is delta. It's not the actual volume. It's the difference between the volume traded on the bid and the volume traded on the offer at a price. And there are certain patterns that I like to look for, because when I see a market, right, you can see bars, it's going to have, at price levels, it's going to have positive deltas, it's going to have negative deltas, at different levels, right? We don't know until the actual trading is done. Like, for example, this bar, we don't know that the bottom part of this bar is going to be all negative delta, right? Which, when I see that in a green candle, is a sign to me of, a form of absorption, right, in that bar. It doesn't necessarily mean it's absorption for the whole entire day, but in this bar, the way this bar developed, it opened up here, tried selling off, but there were strong passive buyers who absorbed that selling here, 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 here. The market rallied back. You got the aggressive buying coming in here, 107, 68, 80, 32. Okay, Now, this is where it gets a little bit interesting, okay? Because like I said, every bar is going to have some sort of volume either on the bid or on the offer. And honestly, a lot of times it doesn't mean anything, right? We all like to try and read things into the market, in my opinion, and majority of the time it doesn't mean anything. Where I like to use delta footprints is when I'm analyzing turning points in the market, okay? And for example, right, obviously we hit the high of the day right up here. We sold off down here, and then we started reversing in this bar, right? We got that long wick, and in that wick, I see aggressive selling into passive bids here, right? Passive bids are people that are working bids. The aggressive selling, aggressive selling, aggressive selling, aggressive selling. How do I know it's aggressive selling? Well, it's negative delta, right? It got through this price level, this price level, this price level, this price level, and stopped down here. Then it reversed, and I see the aggressive buying coming in. How do I know that's aggressive buying? Well, one, it's trading on the offer, right? It's the aggressive buyers are buying from the passive sellers, and price is moving higher. This is, like a reversal bar to me, okay? When I got that strong selling going down into a low area, again, this is a swing low, right? We just sold off, then followed up with aggressive buying coming up here. I'd be looking for this market to pop up. Okay, now bars where it's kind of mixed, like this bar right up here, right off the high, not the bar on the high, but the bar right after. Positive delta, negative, negative, positive, negative, positive, negative, negative. That's nothing, right? That doesn't mean anything, to me at least. Maybe somebody's got a way of analyzing it, but I've looked at these bars, I spent a lot of time with them. And to me, that's just normal trading taking place. Like I said, where I'm looking for the deltas to come in play, is a sign of absorption or potentially trap traders, is at swing highs or swing lows, or basically, after a move has been made. Or there's going to be other times like here, okay? So look at this. We rallied up, made the high, started going sideways, tried to break down a little bit, right? And at this point, this was your sort of swing low here from the time we had hit that high. Then we get this little push down with strong volume here. Now again, this is delta at price minus 507 on the bid. I'm not saying this 507 was the amount of contracts. That's the difference between the volume that traded on the bid here at 44.89.5 versus the volume traded on the offer at 89.5, and it was minus 507. So it was quite strong, right? Price got through there, got through there, got through there, and then reversed back up. So when I see it sort of poke below a recent low, and I just see some strong aggressive selling coming in here, I know it's met with absorption. I know that there was passive buyers here basically to absorb whatever was taking place. If this market went down a little further, I might see some more signs, the negative delta at price here absorbing it, right? So when I see it sort of poke down below and then come back up into that range, I'm already thinking that, there's potentially some absorption taking place down here, right? Market sort of goes sideways and then pops back up. Now, sort of one of the patterns that I introduced several years ago, which has been used and abused by other traders stealing it as their own. So I call it delta tail. Okay, and basically what that is, it's a red candle down with all negative deltas, but with a positive delta on the top. That's sort of your tail, right? This is what it looks like on a bearish bar. If I could find a bullish bar here, there's another bearish bar right here. See if I can find a bullish one really quick. This would be a bullish one, right? Negative delta on the bottom of the green candle, all positive delta. Because what it's telling you is, the bar opened, pushed a little bit lower, ran into some absorption, and then all aggressive buying taking place, right? And the opposite is true up here, right? Bar opened up, met some passive sellers up here, and then all aggressive selling coming in down here, okay? Now look at this, okay? So we had this nice move up. You get up here at the high of the day, and it's all positive delta. So I know that up here, there was probably some decent liquidity coming up in here, right? Now, as you're going up, when people say, why is this bar so important? Why is it not this one here or this one? Well, I know, as you're going up into a high, I'm not going to run into liquidity. I'm going to be running into offers at the highs of the day, okay? And again, so I'm not surprised to see it positive delta, positive delta, positive delta, then even up here, positive, positive, positive. But then when I get up here, I still got those resting offers in the market that are getting taken out. But then what happens is they're left up there, right? These 4 price levels with positive delta, and then it's all negative delta here. So I know that we had that aggressive buying coming in here, and then there was aggressive selling coming in. Now, how is that different than a bar like this? Well, this is a green candle. Price is still going up. The move has not, the move up has not ended, right? Even though this bar looks kind of similar to this bar in the sense that you got positive delta on the upper right-hand side, right? And you got negative delta on the bottom left-hand side. But the price action is telling you this market is still moving higher. What I want to see is the market stop moving, then the aggressive selling coming in. Because at this bar, it's sort of forming differently. This bar opened up, traded down, and then the aggressive buying came in. This bar opened up, traded up, ran into strong passive sellers, and then the aggressive selling came in, and we closed down. Okay, now, some traders have identified a bar like this where it's just all negative delta, or if it was a green bar, be all positive delta, as being a bearish sign. Yeah, I guess so. I mean, it's all aggressive selling in that single bar. I forgot what the word is that they use for delta tower or something like that. Okay, I see a lot of these though at ends of moves or at lows of the day. This one's coming in up here near the high of the day. I might put a little bit more strength into it. But again, I've got my delta tail right here anyway, before this came in. But again, when you see a big bar like this where it's all aggressive selling, sometimes that's pretty obvious. But okay, I mean, it is what it is, right? I mean, sometimes, some people would love a bar like this. Some people would love a bar like this. Some people will love a bar like this. It's really something, again, if you're looking at delta at price, for me, I think it's best utilized, around the edges, right? Around highs or lows, or swing highs or swing lows. And if I'm looking at a move, okay, like a move higher, taking out new highs. Today we got a big, this is an 8 range chart. Where's the cash open? Somewhere in here, 837, right? We started going up, taking out these highs. What I like to see, I don't see it developing here in the E-minis today. But what I would like to see, right, when we're going up, I like to also see not just the offers being taken out, right? That's what you want to see, right? You're going higher, higher, higher. What I would like to also see is bids coming in, in the bar as well. Strong supportive buying. I don't see it right here, but let me see as we get a little bit higher here, like right here, this minus 349, is nice. I would prefer it came in here like this minus 239. But again, we got a strong offer here, minus 1,000. Or sorry, positive 1,000 in the delta. But as we come up here, make a new high, 370 negative delta. So I know, again, this is not volume. This is the difference between the volume that was traded on the bid, the volume that's traded on offer. I know 370 is pretty strong. I mean, granted, we did have, 1,000 here, 500 here. But anything above 250 is an 8 range chart. In my opinion, is generally pretty strong because I don't see a lot, right? Again, I'm just eyeballing it really quick. I see a lot of stuff between 50 to 150. So 370, that's a strong bid coming in. That's what you want to see when a market is going up. Just as here, when a market is starting to go down, right, it's dropping. And I see a strong offer coming in, 422. To me, that's strong, right, on a market that's falling. So I know that there's supply coming into the market. How can I tell? Is because I see the strong delta coming in here at 44.76 and a quarter, this 422 contracts. Okay, so again, when you're dealing with volumes, you want to be paying attention to what the volume is that's, trading basically, because that's going to give you sort of insights into, what's taking place in the market. And again, as this market is going up, right, you see it's going up. It's got a decent bid, well, not decent bid, but a decent volume, minus 147. It's sort of on the higher end. Again, I'd like something above 200, 250. But again, volume is relative. Okay, and you can see as it's going up here, see some decent bids coming in here in the sense of delta 3 minus 320 minus 304 minus 300 right at the highs of the day here, right? That's what this line is, right? And just as you going up, right, you want to see those strong bids coming into the market, right? Not just offers being lifted. I mean, that's just one part of the equation. It's nice to see the offers being lifted. That's what you need for the market to go higher, but to stop the market from dropping, you're going to need decent bids. So if you're seeing decent bids coming in terms of deltas at price, you know, basically meaning you have negative delta, you know, basically some supportive bids in the market on the way up. That's to me that's like the extra bonus, the cherry on top of what you're looking for. Okay, so I hope you guys appreciate this video and got something out of it. You know, a delta at price chart is something that's extremely useful. So if you're not using it, you know, take a look at it, watch it, see if you could use it in your trading. And I'll see you guys on the next video. Bye-bye.